Hello and welcome to this week's episode for Conservative ETF Investor. I am your host. My name is Ken Cogliano, Senior Market Analyst for Conservative ETF Investor. This is going to be the stock market update for January 25th, 2025. We currently have a yellow for the stock market strength color signal. This is the video content that we are going to go over today for an intra-month video. So intra-month is shorter videos, end of the month videos are full content videos. So here is all of the items that we're going to discuss. If you'd like to pause the video, I want to try to make these videos as brief and short as possible. Okay, with fresh data coming from the Fed as of January 24th, there is a 97.9% probability that the Fed, Jerome Powell, is going to hold rates on the January 29th, 2025 meeting. Last week, this is what the markets did. The S&P 500 gained 1.74%. NASDAQ 100 up 1.51%. IWM small caps up 1.43%. So all the indexes were up last week. Okay, now we're going to share with you our trades that we send out to our subscribers. And I do 4 portfolios. So I do SPY representing the S&P 500, QQQ for the NASDAQ 100, IWM for small caps, and I have a small account in which basically anything goes. I have the ability in that portfolio to purchase or sell any product that is available on my broker's abilities for me to purchase. So last week on the SPY portfolio, because that's the one I'm sharing with you, the audience, if you want to see all the portfolios, you have to be a member. You can sign up at this link right here. It will be down in the description down below. Now, for the SPY portfolio, so on Tuesday, January 21st, 12:15 p.m. Pacific Standard Time, the message that we sent out was the markets are moving higher and we want to put to work our last 25% of shares. So in the SPY account, we bought 50 more shares. So then on Wednesday, January 22nd at 7:26 a.m. Pacific Standard Time, the next alert that we sent out to the subscribers was the market has reached a target level in which it is expected to move sideways. We're going to place a covered call at $1 above the current market price. The expiration will be 129.25. So that was the call that we put on, and I'll show you that a little bit more in detail coming up. All right, this here is a 10-day candlestick chart for SPY. And in this blow up of the candles, you can see the trades a little bit more closely per candle. So on this day, which was January 27th, we did purchase 50 shares at 598.06. That was on the 17th. Then on this day, the market was continuing to move higher. We said, okay, on the 21st, we're going to buy 50 more shares. Then on this candle, the 22nd, okay, let's sell to open, a covered call, 607 strike, 129.25 expiration, and at that time it was $4.04 per share. So we totaled, because we had 200 shares in our SPY portfolio at that time, we were able to bank $806 into our account with that trade. And the market has been kind of moving sideways to upward since that trade has been put on. All right, here are the trades that we've made in 2025. If you want to go back and see more of my trades, you can head over to my website. The link is right here down in the description down below. Also, if you want to sign up for the full trade list and to receive real-time trade alerts, it's at that same link. All right, here are the trades that we've made in calendar year 2025. And let's see here. What do we got going on? So the trades that are open are in yellow. So anything with the yellow represents an open trade. Now, if you remember that last trade I just told you about that I placed on 1/22/2025, we did the covered call and we sold the covered call, and we sold it at $4.04 per share. Well, the price has dropped from the time that we put it on to today's date, and the current price is $312. So we're profitable in that trade by $164. Now, we did start the year off with $130,000, and our goal is to build the portfolio from there. Currently, we are up 2.63%, and we are up, $3,424. That's how much we're currently up in the portfolio. Now, our whole goal here at Conservative ETF Investor is we want to beat the S&P 500 buy and hold investor. Their returns are up 3.73%. So we are not accomplishing our goal yet. It's early in the year, it's only January, and we're not behind by that much. But I do want to recognize and acknowledge that we are behind, and that is not our intention here. We want to be on top of those guys. Okay, this here is an equity chart so we can see how much we are doing compared to the buy and hold investor. Now, our portfolio is the one in blue. The buy and hold investor is the one in pink. So you can see how well we've done since the beginning of the year to the current date. Now you can see there's a lot of space here. We have a lot of trading to do between now and the end of the year, and you know what our whole goal is. Now in 2024, we smoked the returns of the buy and hold investor by 14%. We were at 37.29% with this strategy, whereas the buy and hold investor was at 23.30%. Again, if you want to sign up and you want to receive those real-time trade alerts and be a member of our family, you want to hit this link right here, which will be down in the description down below, and that will take you over to my website. Okay, so when you click on the link in the description down below, it will take you over to my website right here. And here on the home page, you have the ability to click here to go directly to my YouTube channel. So if you click here, bingo, it'll pull up all my videos that I've posted here in the past. Going back over here to my website, if you scroll down on the home page, there's also a contact us in case you want to send me a message. Coming over here to the portfolio tab, this talks about our returns for 2024, as well as a little bit of our portfolios that we're currently managing. So on this top one here, this is what we call the small account portfolio, and we have a starting capital of $3,450. We're trying to build it out from there. We're going to compare that against the S&P 500 buy and hold investor. The next portfolio down is the SPY portfolio, and we're going to compare ourselves against the buy and hold investor compared to our strategy. Next is the NASDAQ 100, and I should mention that the NASDAQ 100 has a starting capital of $115,000, and the SPY portfolio has a starting capital of $130,000. Not that you have to have those levels, but it's best to work with those levels with the strategy that I am implementing with the portfolios. Then the last one is the small cap portfolio, starting capital of $50,000, and we go from there. And all of these indexes, we're trying to beat the buy and hold investor. Now if you come over to the, let me go back to the home page. So if you go back to the home page, if you want to receive real-time text and emails on my trades or my trade alerts, you click here. There'll be 3 options here. The silver membership, which is every month, month-to-month subscription, you just cancel at any time for $25 a month, or the gold membership, which is once a year payment of $250, which is a $50 savings over the monthly membership. And if you just want to support the channel and support the work that I do, you can just be a patron and do a one-time donation of $25. And that's also on the pricing plans page. Now, on the members trade page, if you become a member, this is what you're going to gain access to. You're going to gain access to the 4 portfolios. Now, I update this every single weekend. And then here I've got the 4 Excel spreadsheets. So I'll share with you guys the SPY Excel spreadsheet. So if you were to download the Excel SPY portfolios spreadsheet, I've got the tabs down here, and we know what the current date is and how the portfolio is doing. Come over here, you have the accurate list of all the trades. As a matter of fact, you can go back and look at 2024 and 2023 and look at previous years. So in 2024, that was a really good year, 37%. Coming over here, this is the conservative ETF investor equity curve. So here is our equity curve for the SPY portfolio, just looking at SPY. This is the buy and hold investor year-to-date equity curve, and then this tab over here is going to give you both portfolios in a percentage basis. And our goal here, our whole goal here, is to beat the returns of the buy and hold investor. Now I do have some more tabs in here that's part of the Excel spread document here. I've got cash secured puts. So in case we do some cash secured puts, I can input the data here, and it will give me some information right here to tell me how well of a position that might be. Over here I've got a covered call calculator as well, so I can put in the information on the covered call and in the blue cells here, and we can look over here in the tan cells to see how good of a trade that would be. So there's a couple of examples that are in here pre-populated already. So let's see, the first one here on this line item 6, that would have been a 4-day trade, would have had a return on investment if it was flat, meaning uncalled, at 28%, if it was called at 67%. So that would sounds like a pretty good transaction to me, right? And that's on an annualized basis. So anyways, and these are older, this is going in 2024, so we have nothing like that on it at this time. But that's all part of the package that you receive when you become a member. So you'll get access to all 4 of the Excel documents, and then scrolling down here, you'll see what the current trades are, how well we're doing with the SPY portfolio, as well as all the other portfolios that I manage. And then over here in the More tab, there's a Contact Us, there's a Documents. Also, if you just want to receive, this is just a free document. If you want one, the Excel spreadsheet here, you can just click here and download that document yourself for free. And then, of course, the disclaimer page. But basically, that is my website in general. Okay, now we're looking at the S&P 500 weekly candlestick chart with the duration of 1 year. Now, what is happening here? You can see that I've got in here a support and resistance line. We were trading inside of this downward trading panel, but then bam, as of last week, we broke up out of that trading channel to the upside. So I've got here a symbol telling you that this chart has a bullish look to it. Now on the MACD, which is down here at the bottom, at this level here, the black MACD is below its signal line, but look at how it's curling here, ready to head north. Also, slow stochastics is already crossed above its signal line. That's going to be traveling north. All of these things are bullish activities. Okay, now we're going to look at a daily candlestick chart with the duration of 6 months for the S&P 500. Few different trend lines here, but the couple things that I want to point out here. And I've got down here cycle brackets at the bottom. Now this cycle low here represents that one. This one represents that one, and it looks like that one represents that one. This cycle was a cycle breakdown. So that was like, that's not good. This particular cycle was a bad cycle. But this cycle here with that low representing right there, this strength is so strong, overcoming these highs, that's telling you, that negates this breakdown, this negative cycle. So the fact that this move was so powerful, so strong, overcoming and making new highs, that's telling you that this is bullish, okay? So Even though this cycle was a negative cycle, because of the action so far of this cycle, that is completely bullish and we should be going long. We should not be placing any shorts at this time. Now, this move was so powerful, so quick, so strong, the market just simply needs some time to digest it. Expectation, sideways move. Now, you can see here in the slow stochastics how we've clearly reached the top and it looks like it's going to come down a little bit. MACD is still traveling north. Overall though, this move here was such a strong move, I'm expecting sideways action for right now. Okay, now we're going to look at the VIX volatility or fear index. You'll notice here that I've got the bullish symbol because right now we are in the ultra low range. We're trading right there. MACD, okay, is heading south. Slow stochastics below 20. And it looks like it's traveling sideways to just a little bit up. Still, it doesn't matter. Bullish. Okay, now this is the New York Stock Exchange advanced decline issues. And I also have in here in green Bollinger Bands. So on the Bollinger Bands, you can see that here the advanced decline issues came down close to the bottom of the bands and then just went north. So right now it's up here, up the upper end of the bands. So normally you trade in between the bands. So if we're at the upper end of the band, which we are right now, that tells you that there's not a lot of energy to continue to move this market higher. Still, the fact that we did this move from the lower band to the upper band, overall, that's a bullish signal. Now the MACD is traveling north. Slow stochastics looks like it's topped and it's traveling sideways but above the 80 line. Generally speaking, bullish. All right, now I've got a symbol here that's a bear and bull because this particular chart that I'm going to go over looks like it's neither bullish nor bearish. Now, what chart is this? This is the 10-year U.S. Treasury yields, TNX. That's the candlestick chart. Now, in blue, I've got the S&P 500. In black, the ETF, which is TLT, which is 20-year bonds. So if you look at the candlesticks, you'll notice that we appear to be in a trading range between here and here. And until we come out of that trading range, we're in that trading range. So I'm going to call this neither bearish or bullish at this time. Now, down here in the MACD, you look like you're heading south. In the slow stochastics, it looks like you're heading north. Again, you're getting cross currents here. Sideways action basically is what I'm thinking about for the market. All right, this here is Warren Buffett, the Oracle of Omaha, one of the best market traders of all time. Over here is CNN Business Fear and Greed Index. You'll notice I've got the symbol of the bear and the bull because we are completely in neutral here. So this market can go either way from this juncture. So unclear right now on how we are going to trade based off of Fear and Greed Index. Now we are going to look at seasonality. You notice I've got the bear symbol down here. So from a seasonality basis, we are bearish. Why is that, Ken? Because for going back for the last 5 years of data in the month of January, 40% probability that you're going to close higher than when you opened. That means there's a 60% probability that you're going to close lower. Well, what's happening? For the month of January 2025, the S&P 500 is up 3.73% with the 60% probability of being negative for the month. So that tells you that there's a 60% probability of a 3.74% decline for the remaining month of January, which there's only 1 week left. Not good from a seasonality basis. We're bearish. Okay, now we are on the Think or Swim platform. This is SPY 3-year weekly candlestick chart with our cycle brackets of the major and minor cycles. Now, what do we have going? And I have one alert being sent to me when the market reaches 575.90. Why is that? Because that looks like a low right there. If we start breaching that low, which I'm calling a cycle low, then things are going to start heading south. So I want to be alerted right away when that happens. That's why I've got the alert set in place. You'll notice down here in my notes that sideways action is expected. I do have some trend lines here, and you can see this valid trend line taken from that cycle low to that cycle low, and we are currently trading above it, all bullish signs. Now I do have a high and then a trend line here. We are coming up towards that high. We're close to it. We're not at it yet, but we're close to it. I do expect us to ultimately tag and surpass that, but right now as you know, I'm looking for more sideways action. Let's switch over from weekly and go to 1 year daily, change our brackets to 1 year daily. And what do we see looking at this? You'll notice that I've got a neutral cycle here, and this cycle was a negative cycle. We talked about that earlier. But the fact that this run up is coming up so hard and so strong that I'm saying that basically this negative cycle really isn't going to count like a negative cycle. We're looking too bullish really for me to be negative on the market. So overall, I am bullish on the market. For currently though, I am expecting some sideways activity. Okay, here is an Excel spreadsheet that I created in an effort to get the strength of various asset classes and the 11 S&P 500 sectors. We want to compare last week's reading, which was red 20, to this week's reading for the asset classes of 41. Things are moving more bullish. Over here on the 11 sectors, last week 33, right now 48. We've got a yellow signal. Last week we had red signals in both of these. That's why the colors are red here and the red signal here. Now we're moving from red to yellow. We're not in the green section. Green, you have to be 61 or greater. Well, the numbers aren't there yet to support green. That's why I've got this down here. We're neither bearish or bullish with this information. We're a little bit neutral, but things are improving compared to last week. All right, that is going to take us to the conclusion of this video. January 25th, 2025, market summation, according to me, Ken Cogliano, Senior Market Analyst for Conservative ETF Investor. This market is getting stronger, as noted by the yellow on the strength signal. We went over that. Now, I did mention in previous videos how we were looking for a dead cat bounce. Well, we got the bounce, but we are at and making new highs. This tells us this market has strength in it and we need to be playing it to the long side, which I went over. So we are long this market. There is caution right now because we've got a yellow signal, but that is how we're moving forward with our market. So I'm expecting sideways action for the last week of January. Will that actually happen? Who knows? Why? The market is an 800-pound gorilla. The gorilla is going to do whatever it wants to do whenever it wants to do it. All right, I hope you got some valuable information out of this video. If you have not done so already, I want you to smash that like button down, subscribe to my channel, and ring that bell. I thank you and wish you good trading.